Hi everyone, let's go over my bullish and bearish medium time frame, low time frame and micro Elliott Wave scenarios on Bitcoin. But first I want to show you what is possible when learning Elliott Waves, because remember this one from a video on the 21st of May. Faking out the triangle at the high, faking it out at the top and then move to the upside, or the expanding flat scenario, 3, 3 and then a 5 wave move to the downside, or from yesterday, taking the lows and then moving to the upside. These type of scenarios are based on Elliott Waves and have all played out very, very nicely, which I will show you in these scenarios because we're going to go through these scenarios, right? So the first scenario I now like to show you is the medium time frame bullish scenario, where we've been looking for a 3-wave structure in an ABC, which is currently an alternative scenario for me and at the moment not a preferred scenario for 3 reasons that are written over here. First, the low of this wave C was not made on one of my target boxes, and the target boxes, like the yellow one over here, those are areas of interest with good amount of confluence. However, over here we didn't really have a good amount of confluence. The only bit of confluence really that we had was a support resistance flip, where over here we had resistance and then pulling it to the right we had support, but that was really it. So actually not too great of support, and therefore preferably finding a little bit more downside would be nice. Then also wave C is shorter in time. Wave C over here is 0.618 of wave A in the length of time. So if you pull the fib time from the high of A to the low of A to the high of B, you're comparing the time of wave A to wave C. You can see that wave C is shorter, as if wave C was equal to wave A, it would have ended up around the 1-to-1, which is not the case. And the final reason is that there is overlap between wave 1 and a potential wave 4 for people that are thinking about this one. 1, 2, 3, 4, and then another move to the downside in a wave 5. So some people have then wave B over here, and then wave C is still in the making. And I don't really like this scenario because of the overlap, which is very rare in an impulsive structure. You don't really like to see overlap between wave 1 and the potential wave 4. And yes, this wave C is at least longer than wave A, which is also most common. However, if we look at the length of this wave C, it would be nice if wave C is not longer than the 1.618 fib time taken from A. But as you can see, we're already past the 1.618 of this wave A. So you really want to see price move towards the downside in this scenario and not towards the upside. But more about that in the low time frame bearish scenario, because we still have a bearish scenario where price might go to the downside, even though it doesn't look like a preferred scenario at the moment. If we then go to the bearish scenario, which is my more preferred scenario, then we're looking at this one over here, where we then have a 3-wave zigzag structure ABC in wave W. Then we are looking for a 3-wave structure wave X. And then eventually we're looking for a 3-wave structure to the downside in a wave Y. And what is quite nice about this scenario is that if price is going to end up at the target area that we currently identified on the low time frame scenario, showing you in a second, which is about here for this potential move to the upside, which then also goes in 3 ways, by the way, preferably somewhere over here. What would be nice is that if price is going to end up over here before then potentially a move to the downside, because with everything you don't know what price is going to do. It's all probabilities. Same with the pictures I've shown you. These are all based on probabilities, right? No one knows what price is going to do. But if price might find some resistance over here and move to the downside, what I think is nice is that then the target area for this wave Y is below the yellow target box, meaning that preferably price pushes through the yellow target box. And the reason I think that is nice is because many people are looking online for support around this yellow target area. The prices between like 25 and 24k are very popular, but I think it would be nice that, yeah, of course price can find some support but then eventually fall to the downside for maybe the target box I have below the yellow one, which is between 22.6k and 21.8k. So if price is ending up somewhere around this area between basically 27.7k and 28.3k, I think the target area that we have here at the lows for a potential wave Y are going to be very interesting indeed. So something to keep in mind, that if price is going to find a reversal over here, then this blue target box is going to become very important. If price, however, is going to push and continue to the upside, for example, towards this area, the blue target box that we have a little bit higher, between 28.9k and 29.2k, of course, this goes up as well. But then if that happens, it becomes more likely that the yellow target box is going to be the support area. So it really depends on, in this scenario, where wave X is going to end, for then which support area is going to be most likely. If we go to the 1 hour, to the bullish scenario, this is the one supporting a bit more downside, as I just mentioned. So over here, the target area for this wave Y and then a 3-wave structure in a WXY is just above the highs of this range. So over here, high 1, high 2, high 3. Target area of wave Y just above, taken from the low to the high of W to the low of wave X, sitting between 27.6k and 28k. So this is an important area for price, and also if price would then move to the downside, the blue target box is the one to look for, right? If we're going to push through this area to the upside to the blue target box over here and potentially then find more downside, the yellow target box is the one that is of interest. So in this scenario, price has bounced on the 886, and that is actually important because this is a 3-wave move to the upside and we have a 3-wave move to the downside, and the 886 is more commonly a target for a wave B or a wave X than a wave 2. 886 is common for BX but a rare target for a wave 2, which also makes it less likely that this is a first wave 1 to the upside followed by a 3-wave wave 2 before then a bigger 3 to the upside. It's more likely this is still part of a corrective structure because it retraced all the way to the 886. Now in this scenario, on the lower time frames, on the micro, which I'll show you in a second, the currently preferred scenario is this being a 3-wave structure over here, which I'll show in more detail, where the important target area that we have been looking for was the blue target box over here that has now been touched between 27.1k and 27.2k. And this target box over here will then decide what's going to happen next. Either we're going to be in wave Y or we're going to be in a wave C, because there's a big difference between a wave Y and a wave C. Over here, this can also be an A, B, C. Why? Because we not only touch the 886, but also the 0.9, which is just below. The Fibonacci taken from the low to the high of A, then the 0.9 over here is just below the 0.886, obviously. And the 0.9 is a target for a regular flat. And a regular flat is a 5-wave move to the upside. So if price is going to continue pushing to the upside and takes these highs already without retracing, then it's more likely this is a wave C. If this is a wave Y, preferably you're going to see something like this. So we have to wait and see what happens. Of course, we do have a 3-wave structure in this move to the upside right now, but the targets of this 3-wave structure are not taking the high. So preferably for this wave Y over here, the blue wave Y, we're going to see a bigger 3-wave structure, but of course we have to wait and see what happens. But in this scenario, what I outlined right now is that this is the high of W, and then we would be looking potentially for a 3-wave move to the downside, something like this over here, eventually wave X, where we have the golden pocket and the 786 area, as well as some support, the blue target box, before then eventually another continuation to the upside. And then see something like this, taking the liquidity of the double top that we have over here, finding support at the target box here at the bottom between 26.2k and 26.3k. Maybe the first little bit of support can be found over here, which is in the middle between 26.7k and 26.8k, because we do have some support here as well in case price moves to the downside. So this scenario could definitely be a potential interesting scenario for price to follow. If we then look to the bearish scenario, the bearish scenario is that this is a 1-2 to the downside. So a WXY is already finished, and now we are looking for an impulsive structure to the downside. In this scenario, that means this is a wave 1 to the downside. This scenario, by the way, I spoke about this trading setup where I said take profit or close, for example, over here from an Elliott Wave perspective, because this was the bullish target area. So always take profit in bullish target areas, at least if you're short, that is, or close potentially. So we can actually remove this from the chart as price now retraced to the same level. But over here we have the 886 taken from the high to the low of 1, and there we go again, price hitting the 886, which is a rare target for an impulsive wave 2 and not a common target. So it makes it more likely this then is an ABC. However, in the scenario on the medium time frame, after this corrective structure, you're looking for downside, and in this scenario that would be a potential 5-wave move. So yeah, this doesn't really look very likely for a wave 2, either than an ABC, for example. That is more likely because we now touched the 886. Or, of course, it is more likely because price might find a continuation to the upside, as mentioned in the other scenario, as the invalidation is taking the high at 27.5k, and we really want to see price moving to the downside impulsively if this scenario is going to be the one that is going to be true, and then at least take the lows that we have over here at 25.8k. If we go to the micro scenarios now, this is where it's really happening, right? So in the micro scenarios yesterday, as mentioned here on the picture, waiting for that move to the downside, for then a move up, waiting for the move to the downside, for then a move up. And also on the CVD divergences, after that move to the downside, after this wick taking the lows, one started to build bullish CVD divergences over here. So price moving to the upside. Then you had this candle to the downside over here, a bit of a range. You could see that the CVD was falling. So higher low on price, lower low on CVD, bullish divergences, pushing price further towards the upside. Very nice indeed. And in this scenario, we're looking for a three-wave structure, which is then over here a zigzag in a W, corrective X, and then another zigzag in a wave Y, which is then a 3-3-3 wave structure with the most common target area for wave Y being the 1 to the 1.236, which is basically surrounding the target box between 27.1K and 27.3K. And that was the reason why this target box is so important for the bullish and the bearish scenario. So over here now, price reached that target box. It hit the 1.236 just now. Over here, we do have a daily naked point of control just above, but it hit the targets it needs to hit, which is this area over here. And after this, you would expect eventually more downside. Now, of course, price can range in this area, and then eventually, maybe on a Monday, right, tomorrow, take the highs, wick into the daily naked point of control, and then move to the downside. So then on Monday, the markets, when they are open, might take the liquidity of the potential range that might be forming on this Sunday, take the liquidity, hit the daily naked point of control, and then move down in this scenario, where then we would be looking right for a three-wave move down and then a move to the upside once again. So we have to wait and see how that pans out. The more bullish scenario is, of course, that price is already going to take these highs. So that is why I also have an invalidation at the highs this time at 26.7K, because if price continues pushing, that is not something you really want to see in the more, let's say, bearish scenario or bullish scenario, where you want a reversal in this area over here. At least that's the most common target area for the blue wave Y. But if price keeps pushing, we might be in that wave C. So we have to wait and see, of course, how that is going to play out and what price is going to do on the lower time frames also today on this Sunday, right? If we then do look at the CVD divergences, then on the higher time frame, because the lower ones I've already shown, we still have this bullish divergence, which is kind of like playing out at the moment. Of course, by now, stop loss here, break even. No financial advice with any setups I give you, of course. I don't give anything, by the way. So over here, we then have a move to the upside, creating a higher low eventually because of this move to the downside. And now because of the bullish divergences, higher low on price, lower low on CVD. This is the target of the CVD divergences at 27.7K. So that is very interesting, which also then gave the potential setup for then a move to the upside. Also, remember, we had bullish divergences over here, which was very nice as well. So yeah, it's been a great range so far, and we have to wait and see how things are developing now on Sunday. So I hope this video was helpful or valuable to you. Please check out the most recent educational update I've done about the best trading indicator you can use, in my opinion, which is the CVD that I use myself. Thanks for watching and subscribing, and I will see you at the next one. Bye bye.